Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Nigel. Guys, hi, morning.
Hi, it's a good Friday, right?
Yep.
Salary comes this weekend, long weekend.
3-day weekend.
3-day weekend, and the last of the 3-day weekends for a long time.
And normally I talk about the salary. This time Reema is jumping in as well.
I'm just saying it's a good Friday.
It's a good Friday. It's a good weekend, but we have a lot of work today to do.
Yeah.
And then when you come back next weekend, there are plenty of results that are coming. At least a lot of my companies as well come out with numbers.
Nigel.
Yeah.
Early morning.
Reema starts off earnings and Nigel ends it.
I don't know. It's a fine balance between both you guys, positive and negative. Right? Anyway, it's a good way to start the end of the week because, the handoff from Wall Street is pretty good. You've got U.S. markets, which closed the session at the day highs. It was a up and away kind of a session, the slow and steady rise in U.S. markets right from the word go, and it kind of built up all the way into the session. The S&P was up about 2%, the Nasdaq was up 2.5%, so steady march higher. By the way, the S&P 500 has reclaimed the 4100 important technical level. It's what it's also done with yesterday's sharp rallies, that it's broken a streak of 6 straight sessions of lower lows that we saw on the benchmark S&P. And that's a good thing. Technically, it's a good thing. The level being taken out is also good. Facebook parent Meta reported numbers, and the stock was up 14%. Well, large US megatech IT companies have mostly all beaten expectations. Maybe expectations were a little depressed. But even otherwise, even on a year-on-year basis, numbers are looking much better. Meta, of course, suffered because of its own individual problems over the last year and a half or so, and seems like they're coming out of it. Amazon also reported. We'll talk about all of that in a bit. Now, data, right? U.S. economic data. On the face of it, the GDP numbers missed expectations. But you had the detail within the GDP, personal consumption, which came in very strong quarter on quarter. And then you had other data which came through, weekly jobless claims, for example, inflation numbers. They were all strong. It basically means that when the Fed meets next week for the decision, the FOMC decision, it perhaps will be an uncomfortable hike because it's still at the margin. But if you want to kind of say whether the data is hawkish or dovish, it clearly is. It leans on the side of hawkish. It's not dovish. It just still shows you the strength in the underlying U.S. economy. Bulk of the data that we saw overnight. Now, of course, what does this mean for stock markets is another thing, because recessionary fears have taken markets down previously, but so have inflationary fears. We are in that kind of a twilight zone where perhaps we are transitioning from a high inflation environment to worrying about perhaps at some point in the future that growth will start to taper off. All right, let's come to the markets here. Lots of IT earnings here in India post-close, and Reema will discuss this in greater detail, but most of them have missed expectations, unlike what we saw day before yesterday. On the indices, Nifty has closed above the 17,863 level. I've mentioned this over and over again. Finally, we've got to close above it. This is nothing but the 61.8% retracement of the entire fall from the all-time high to the recent low. 18,100 is the next target, which the market needs to kind of... I think the market will set its sights on 18,100, let's put it that way. For that to happen, though, the market needs to keep supports around 17,775. There's an upward sloping channel. The lower end is at 17,775 now on the Nifty, and that's the number to defend if the upsides have to remain. So far, we've gotten smaller dips over the last few sessions, which have been bought into over the course of the session. On the Bank Nifty, it closed above the 78.6% retracement of the entire fall. Supports there are at 42,800. I'm not putting upside level. Let's see how things pan out. The Banks index has been the stronger of the two indices. But on the downside, 42,800, the lower end of the rising channel, needs to be defended for this up move to continue from here on as well. So pretty good session overall. And you've got the tailwind from the US market as well. How much of the IT earnings will impact, local IT earnings will impact the mood here, I think is the question which we will begin and grapple the day with. Reema.
You know, on that subject, Wipro ADR actually closed up with a gain of 4%, right? Given the rub-off that we've seen from NASDAQ. So yes, the IT earnings from the Indian pack have been a bit disappointing. Generally, there is a positive tailwind to, tech companies. But Asia's feeding off the strong session from Wall Street overnight. Remember, the S&P 500 and the Dow had their best session since January. And look at Asia this morning. Hang Seng is up nearly 1%. The Chinese markets are up 0.6%. Nikkei is up close to about 0.5%. Across the board, you've got green on the screen. And the SGX Nifty is suggesting a positive start of close to about 75 points. Just to talk a little bit more about technology, since that's the hot topic. Now, Meta. Now, Meta closed out with a gain of 14% yesterday. It's up 170% from its November lows. Two key reasons. One, after 3 successive quarters of a revenue decline last quarter in Q1, Jan to March period, Meta finally grew. Meta revenues were up 3%. It's still just a dismal 3% growth, but it just gives a sense that the worst is behind. And plus, the street is applauding the cost-cutting efforts. Secondly, Amazon. Amazon, at one point of time, was up nearly 11% in trade yesterday. It finally ended with a gain of 4.5%, but it slipped very sharply in after-hours trade. From 11% gain in trade, it finally ended down 2%. And this is very critical because what they said in the conference call is that their cloud customers are optimizing tech spend. The AWS revenue growth was 16%, so it's come off from the average of 35-40% it used to see over the last couple of quarters. And they went on to say that in the month of April, growth was even lower. So cost optimization of cloud spends continues. Now, what's the rub-off impact of these FANG stocks on Indian IT? Well, Meta's business model is very different from Indian IT companies. They get their revenues from Instagram, Facebook, advertising. But what AWS has to say about the cloud is very important because an enterprise buys cloud product from AWS, but then to transition, to make the migration and to provide services on that cloud, they will go to Indian IT companies. So what AWS has to say is far more important. And just to quickly wrap up the Indian IT earnings overnight, for Wipro, weak Q1 guidance. Tech Mahindra, it was a margin miss. For LTI, Mindtree, very weak revenue growth compared to street estimates. And for Emphasis, their banking exposure has resulted in the second consecutive quarter of a sequential revenue decline.
All right. Thanks, Reema, for that. I'm looking at trade setup and just wondering at the start of this May series, will we miss those shots? Because April was a stellar series. Out of nowhere, we had closer around a 5% gain on the Nifty. We had 4 straight series of negative numbers, closer around 1% down. We were down 2.5% odd in the previous 4 series. So it was good to see a break from that, and we ended on a winning low. More importantly, to give you a sense about how good the series was, yesterday the final tick was the highest that we saw in the entire series. So April was very, very good. The question is, will we miss those short positions from the FIs in the May series? And I'll tell you why. Just pull up the chart. You look at the start of the April series, the FIs were aggressively net short. And that's one of the reasons why we bounced in style. Now the short positioning is at around 59%. So mind you, they're still net short, but not to the extent that they were, anywhere close to that. And if you're looking at the net short position, just pull that up. At the start of April, it was close to around 140,000 contracts on the short side. That's down to only around 20,000 contracts. The short point that I'm trying to make is this market is not net short any longer. And that was actually a bit of a cushion, any kind of good news, and you would see a bit of a spurt on that. On the option side, well, the FIs have written and bought equal number of calls and puts, so let's not look at that. Option side, 17,800, 17,700 put, both of them did see writing in yesterday's trading session. So the 100 EMA becomes important on the downside, 17,814. That'll be the first stop loss on the downside. Resistance, though, comes in at around 18,050 to around 18,100 because in February, 17th of February, we went to around 18,034 and from there we did a bit of a U-turn. So I'll be watching that range, 18,050, 18,100. I expect some supply to come in at those levels. On the Nifty Bank, which way of 43,000 are we going to swing? Yesterday, we ended bang at around 43,000 odd, and there's writing being seen on both sides. So on the upside, you're looking at resistance at around 43,300, while on the downside, support is at around 42,600. And I say this because on the way up, 42,600 was a bit of a resistance. How to approach trade though? As we've been mentioning, there's a long weekend coming up. You have the Fed meet that's due next week. You maybe have IT stocks that may not support the index. They could be a little bit under the weather. So stay long on the index. That could be the call. But taking some money off the table on the index, I think that'll be a bit of a prudent strategy. SGX Nifty suggesting a 70-80 point gap up. Maybe taking some money off the table will not be such a bad idea. Let's see how this one goes.
Okay, let's tell our viewers then what the call is on emerging markets. Christopher Wood of Jefferies says, greed and fear's global long-only portfolio is at the risk of not being exposed to the next bubble. Though less so in Asia ex-Japan long-only portfolio, given the 8% weightage of TSMC and Samsung Electronics. He says, from everything greed and fear has heard, if there is one AI play to own, it is NVIDIA. As a result, he says, greed and fear will allocate a 5% weightage in NVIDIA in the global portfolio. The new investments in global portfolio will be paid for by removing investments in Standard Chartered and Saudi Telecom and by shaving the investment in HDFC Life by 1 percentage point.
Reema, that line, the global long-only portfolio is at risk of not being exposed to the next bubble. I think it needs some a little bit more context, which we will try and provide for our viewers as we go along. But that's an interesting phrase of words. Well, let's get you some money market views on the rupee. We have Lakshmanan V of Federal Bank, who says the rupee is a strong momentum and traded around the 2-month high against the dollar yesterday, while the euro traded near its yearly high, supported by equity inflows. However, upside for the rupee is capped owing to potential forex reserve buying. It goes on to say, with softer US GDP data and FOMC due in 5 days, Lakshmanan expects the rupee to trade in the $81.5 to $82.25 range.
On the bonds, Lakshmanan of Federal Bank says, with US PCE, PCE stands for Personal Consumption Expenditure data coming in higher than expected, domestic yields may likely sink with any up move in US yield. He expects the 10-year benchmark bond yield to trade in a range of 7.1 to 7.17%, and the market will now await the next week's FOMC for further direction.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit in our special Top 10 segment. But for the time being, let's run you through the stocks. Axis Bank, Indian Hotels, PI Industries and Raymond. They are stocks on the back of positive news flow. And after a while, we have more number of stocks that could potentially react to negative news flow. Today, you have Wipro, ACC, Tech Mahindra, LTI Mindtree, Shriram Finance, as well as Godrej Consumers could be reacting to negative news flow.
Okay, on that note, we'll slip into a very short break and we'll come back and talk about all these top 10 stocks. Stay tuned.